Mortgage fans. So back for another market update, and this week I have a guest, Mr. Nick Plappert. How are you, sir?
Yeah, I'm good, thank you. Yeah, yourself?
Yeah, very good, very good. So weathering Storm Eunice, which I think is coming in today.
Yeah, same down here, which is all fun and games, but
So
tucked in
if anyone
today.
is picking up background noise, that is actually a storm in the background. Sorry if you're getting any of that. But so the reason why I've got Nick in today, very specifically, is we want to go through sort of large mortgage loans, sort of what we consider them to be, the different challenges you might have around that, and Nick's got a specific case study that he wants to talk through as well. So we'll start with a bit about Nick. He'll talk through the case study, and then we'll finish with sort of the most commonly asked questions in this area. So if that all sounds good, I will hand over to you, Nick. So you've been with us a good while. So why don't you just talk through a little bit about your background, what you've done as a mortgage broker, and then more specifically, we'll get into the large mortgage loan stuff.
Yeah, sure. Yeah, so I've been with Rose Capital for a number of years now, but I started off way back in 2000, which is quite a scary time ago, 22 years now. But specifically focusing on large mortgages since 2007. So that's been my real sort of focus, working with the private banks back then quite a lot over the credit crunch, but more recently, the high street banks have been sort of getting more into larger loans. That's my sort of area of expertise really, is more, large mortgages over $1 million. And that's where I'm comfortable and where I sort of sit in my sort of advice really.
Cool. Well, I can certainly say, yes, it's been with us. That very much holds true. So I think you just took the record for me for the largest loan, which I'm not bitter about, but it's not about ego either, Nick. It's not about that. It's all about doing the right thing for the client, isn't it? But you sort of touched on it there. So I know there's an FCA definition around sort of high net worth clients. So maybe why don't you cover off what you specifically consider a large loan, and what your understanding is of the rules around the FCA on this?
Yeah, a large loan for me is really anything above $1 million lending, and the FCA determine sort of a high net worth individual or large loan with somebody either earning over 300,000 or assets of over 3 million. So that's sort of ballpark where it is. It's obviously different for some people, but we've focused primarily on London, and that's sort of where large loans sit.
Okay, cool. And so around that sort of the FCA definition, that's probably quite relevant, isn't it? Because if my understanding is correct, sort of normal rules don't apply. It's more sort of common sense. Is that probably a fair summary?
Yeah, they look at the rather than sort of black and white, vanilla approach that they'll do on sort of smaller loans. They look at the client's overall position, and look at their assets, and can look at affordability differently as well, because if somebody's earning, say, over 300,000, their disposable income is more than somebody earning, say, 50,000, because a lot of bills are kind of the same. Council tax roughly the same. All of these bills are broadly the same, but so the income is more, so there's more flexibility for lending more, basically.
I completely agree with that. And I think certainly my experience as well, I think the income tends to be more complex as well. So it can be difficult to apply a sort of 4, 5, 6 times income rule because it's not quite as clear. That's sort of So I think that, that's really helpful, that FCA definition, because it's sort of like big boy rules, isn't it? It's sort of a case of whether the deal makes sense, the bank can do it, which is quite refreshing, certainly when you're dealing with sort of high net worth clients.
Exactly. And it's even more so with the private banks than the retail banks. They've taken even more a more pragmatic approach when looking at a case, looking at clients' incomes and assets to be able to lend. So the private banks do even more sort of bespoke solutions than what the high street do. So obviously we cross, if you're using the high street banks where it's generally the cheapest versus the private banks who can do more complex stuff.
Cool. No, I completely agree with that. And I think so that takes us very nicely to the case study you want to talk through. So why don't you sort of talk us through the case you had there, what made it interesting, and then sort of where you got to?
Yeah, absolutely. Yeah. So one of my existing clients is a really good client, helped him 2 or 3 times, but he's just making that big jump now up to buying a bigger property. So he's had his offer accepted at just over 2 million, 2,015,000. And needs to get to a loan of sort of 1.16 million to take into account the stamp duty and works that he wants to do. He's employed, his salary and annual bonuses. It's been a bit of a challenge because it wasn't able to get to quite the loan amount he wanted. It could only get to $1 million with most of the mainstream banks. They were chucking out anywhere from sort of 950 to $1 million. So it's been a bit tricky, but fortunately we've got access to one of the lenders that has bespoke solutions. So I've run it past the underwriter there, and because of the client's strong background, low outgoings, relatively young, they're prepared to take 100% of the most recent bonus. So we can get him the 1.16 that he wants, which is perfect. Also structuring wise, he wanted interest only due to the fact he works in private equity. So he's getting cash bonuses and also what we call carry bonuses down the line, which is sort of profit from deals that he does. So he wanted interest only, and they're able to do that. A 5-year fixed at sort of 2.19%, with rates increasing weekly at the moment. That's pretty good. He was very, very happy with that. So it's all worked out quite well, and so that one's going through this week. So yeah.
Oh, fantastic. No, I think it's a great example. I think the one thing you touched on, which I think is probably worth expanding on, is the treatment of bonuses. Because I think, certainly, again, in my experiences, most clients sort of say to, well, my earnings are like 200-300 grand a year. But then when you break it down, it's like, well, 100 grand basic, 100 grand bonus. And then banks don't take that into account. I mean, some banks can take as little as half the bonus, some not any at all, actually. So actually, to get a bank to include 100% of the bonus, as you can see, it massively boosts the borrowing capacity for some clients.
Oh yeah, it makes a huge difference. Yeah, because some of the banks will use 50% of bonus, some 60%. There's some that will take 100% of the 2-year average, but that's the key. Is most of them will average it. So some clients think, okay, I've really big bonus this year, great, I can borrow loads. But actually, the year before was low, so averages out means that they're not going to get the amount that they think they can perhaps get. So that's why we're fortunate we've got access to all these banks offer some bespoke solutions.
And that's again another point that's just occurred to me as well. It's like we're coming out of COVID now, so a lot of people bonuses going back a couple of years ago through that COVID period, and it's going to be much lower than they thought. So a really, really good point that this is very timely as well. And just one other point that sort of popped into my mind as well. So you've talked about carry in that example, which is a really good example. But often, I've seen clients have vesting stock schedules. So, in those sorts of situations, can you help clients if they have a vesting stock schedule? Because I know some banks don't even include that as income.
Yeah, I mean, most don't. I'd say probably 90%. The high street banks are not interested in that. It's just a bit too complicated for them to get into. But no, I have had some clients who have got vesting stock with, and it's generally with sort of the large investment banks, American investment banks quite regularly, where they've got vesting stock, and we've got that schedule. I have had some of the banks take it into account, but again, it's only sort of specifically large loans, and when you're dealing with a large loan underwriter who has probably experience of that, so that can be taken into account for affordability.
Yeah, cool. But I mean, you explain that perfectly well. It's more niche than people think. Because someone gets their comp statement at the end of the year, you think it's great. And I've had quite a few more clients in tech recently, actually, because it always used to be, say, the big banks and stuff. But more so in tech, we're seeing a lot of vesting stock schedules. So look, completely cool, but it's probably harder than you think, and hence why they should be dealing with people like yourself, Nick, I suspect. So,
exactly.
But that's a brilliant example. I think there's just a couple of questions I want to sort of cap on to finish, which is sort of the most sort of commonly asked questions in this area. So the first one is, how much do I need to earn to get £1 million mortgage? So what would you say sort of the rough starting point is for that?
Yeah, ballpark 200,000. So that's 5 times income. I mean, if you're a single person and you're earning over 75,000, you can get 5.5. If you're a joint couple, you can get 5.5 times income if you earn over 100,000. But about 200,000.
Yeah, I'd agree. Yeah, so household income really 5.5 is that. So it's 180,000 to 200.
Yeah,
puts you in that ballpark, doesn't it? Yeah.
Yeah, 180. Yeah.
Cool. And next question is it easy to get £1 million mortgage? I suppose it depends on how much you earn.
Yeah,
That's also a factor. But how easy is it? I suppose because this probably touches on something in that you touched on it yourself there. The high street lenders are sort of quite good to a certain point, but then you do push off into private banking. So probably for anyone listening, maybe we're sort of just explaining a little bit of the difference between sort of a high street bank approach and a private bank approach, because that is a big difference on how easy it is to actually get the loan.
Yeah, the high street banks have got a lot better. I remember back in 2008, 2009, if the mortgage was over £1 million, forget it. It was private banks. They capped out at £1 million, but they've got much better, and they have, generally they have specific large loan teams that deal with it, and it's not hugely different than getting a smaller mortgage. It's just as long as income matches, good credit score. But on the private banks, it's a much different approach. It's more manual, more bespoke. They look at the client's overall position. So it's not just high street banks, it's credit score, it's 5 times income, and if it fits that, great, they'll do it. The private banks will look at their asset position. They may not quite have the income to meet the mortgage that they're looking at, whether it's $1 million, $2 million, but they may have loads of other assets that they're not drawing income out of. Quite often we call it monetizing assets. So clients might have investment portfolio, a few £1 million investment portfolio, but they're not taking income from that. The private banks will look at that, say, okay, well, you could be getting 4 or 5% a year, so we'll use that as income. And that's just an example of what they can do, where the high street banks just wouldn't do that. They just only look at the actual income you're drawing or receiving.
Cool. Yeah, completely agree with that. I think, probably just to summarize, I'd probably say like the high street banks is sort of an easier process and it's a bit quicker. Yeah. Private banking is a lot more flexible, but it can be a bit slower, and they're going to look at things a bit more detail. So that's where the process sort of differs. So yeah, it's sort of, as long as you've got the income or the assets to get the loan, it is easy, but it just depends on what path you go down, I suppose.
Yeah.
We touched on this. Funny, one of the questions is, can I get 5 times my income? You already explained that very well. It's between, for high street lenders, between 5.5, and if you hit that high net worth definition, probably fair to say those rules just don't apply, for the reasons you actually really well spelt out there about monetizing assets, etc. So I think you've covered that off quite fantastically, actually. So how many times your salary can you borrow for a UK mortgage? And again, I think you've answered that pretty well in that last response there, really. So the only things I was going to sort of touch on briefly is, has come up very much is around sort of vesting stock schedules. You've mentioned carry, you've mentioned bonus, we've mentioned other assets. I think certainly once you get into this area, it's just more complex. That's really sort of the point you're trying to drive through. So I think, as you have done for many years, I'm sure you can carry on for many years. It's really worth engaging with the right broker, because I've seen examples of where people will talk to a bank, or particularly if they talk to a bank directly, they go back to say their bank with Halifax, Santander, whatever, they go talk to them, they say no. Actually, they talk to us, it's a yes. And your case study was brilliant. Not only can you help them, you get them more than what you get on the high street.
Yeah, absolutely. More often than not, we that is the case, basically. Yeah, you're speaking to your own bank, they're only going to talk to you about their own products and what they can do. We've got access to the whole market plus all the private banks, so there's loads of scope. The banks are really keen on lending at the moment, and I think we'll continue to do so over this next year or so.
Couldn't agree more. And what a fantastic note to finish on. So yeah, although it's complicated, it's a good place out there. Rates are still rates are going to go up, but it's still very cheap in historical terms to borrow. So I think if you do have a complicated situation, naturally you say talk to us. But the reality is any good broker know their way around it. But of course, we think we're the best. So thank you very much for your time, Nick. It's been really insightful.
Yeah,
and hopefully catch up with you soon.
Yeah, thanks a lot. Yeah, take care.
Cheers, Nick.
Cheers, bye.